There's your response. Oh, Maurice, you thought Coming to America 2 was funny, bro. This is not cool. We were getting on all right. I thought Coming to America 2 was a shame and a disgrace. But never mind. We're not here to talk about Coming to America 2. Neither are we here to talk about fantastic music. We are here to make money, guys. Today, welcome to Money Monday. Today is the 8th of March. Family, we are flying through this year. We are literally flying through this year, and I'm telling you, we need to get aggressive with our goals and with our targets because we are already nearly one quarter through the year. I wanted to look at something with you today, and it is something which I will call a top-down analysis. Okay, it's something which I'll call a top-down analysis. That will be the lesson for. That will be the topic of today's kind of session if we were going to go through it. And to do that, we're going to take a look at euro dollar. All right, we are going to take a look at euro dollar, and I want to show you what I consider to be a top-down analysis of this currency pair. The point is, what we want to do with top-down is we want to look from the widest possible time frame and understand the current trend and the current range that we are in. So I'll say that again. We're going to do, let me put it on thing. We're going to do top-down analysis. All right, today. And what we want to do with that is that we want to go from the widest possible range, from the widest possible time frame to the narrowest possible time frame to see if there are any potential trade setups. All right, and I'll put that on the chart. We want to scalp the entry. This is another phrase you would have heard me say: scalp the entry and swing the target, which means we want to look wide. Let's see what the targets are, and then we can find a potential entry if there is one. So top down, we start on, maybe the weekly time frame. Sometimes people start on the weekly time frame. Sometimes people start on the daily time frame. But why not? Seeing as we're doing this, why don't we go all the way out and see what we are looking at? Okay, so right now we are. I think everybody would agree that we, on a long-term viewpoint, are in a downtrend. Look, this is years worth of data, and they were not going to be massively important, but I think everybody can see that in a long-term viewpoint, we are in a very, very clear downtrend in euro dollar over the long term. And all you do is you start to narrow down and say, okay, long-term trend is down. Too many years for us to really care about, but the long-term trend is moving lower. Let's see what happens when we move into the daily viewpoint. And you take as much information as you can on the daily chart as well. And the daily chart seems to confirm the exact same information that we saw on the weekly chart. And although the angle of descent is not as steep, you can see very, very clearly. Did I click record? I hope I click record. Wait a second. I think I did. Yes, I did click record. Thank you very much, Rachel. Yeah. So although we are not steep on the descent on the daily chart, you can see that we are still in a downward trend on the, although we are not as steep on the daily chart as we are on the weekly, it's very, very clear to see that the daily chart is also giving us a downward trend. So with this in mind, over the long period of time, we could be looking for a continuation of this downtrend. We could be, but let's continue to drill down into the smaller and smaller time frames to get ourselves a really good picture of what we might be looking at. As I do these kind of top-down analysis, I will kind of mark up just the trend lines. These don't always have to stay on there, but I'll mark up these trend lines. And you know that when you're drawing trend lines, you need to connect at least 3 dots. All right, that's typical technical analysis, and you need to connect 3 dots. And this is close enough. 1, 2, and 3. That's close enough to confirm a long-term downtrend. All right, a long-term downtrend in euro dollar. Then what we're going to do is we've done the weekly, we know we're in a downtrend. We've done the daily, we know we're also in a downtrend on the daily. And we can jump down to a smaller time frame. Let's see what 8-hour time frame is telling us. And we zoom out, take as much information. Now this starts to look slightly different. This starts to look slightly different. And at least since the start of this year, 2020, we can see that the price is quite nicely in an uptrend, right? And it's okay. I want to let you know that it's very fine. It's okay. Very fine doesn't make sense. Is that a word? Very fine? it's very cool. It's okay. It's no problem if you see different trends on different time frames. That's the point. That's why we do that. It's no problem to see a different trend on a different time frame. That's totally cool. What we're ultimately going to do is we're going to see where the trade is now. We may have to wait for that, or we may be able to execute it sometime in the near future. All right. So we know that long term we're in a downtrend, the weekly and the daily. 8 hours we look like since the start of the year we've been in an uptrend. Let's take this off because we don't need that line there. Okay, cool. And then we continue to drill down. What I want you to think about is imagine that you are like an eagle. All right, imagine that you're an eagle when you want, and our trade execution is actually the prey that's on the ground, is actually what you want to snipe. That's what you want to get in. You know the accuracy of an eagle when they're catching their prey, or of a bird of prey. You know how accurate they are. But what we do first is that we swoop. Before we swoop, sorry, is that we circle. We circle around in the higher time frames to get a bigger time frame view of what it is we're trying to accomplish. And then, as we've got the lay of the land, then we start to come in closer and closer and closer. And that's what we're doing by zooming down into the lower time frames. All right, so we're coming down into the 4 hour. Now, the 4 hour gives us a little bit of interesting information. It looks to me like, yeah, we're still in an uptrend, but really we are, we've been going sideways for a little while, up and then down. This is where you start to do a little bit of analysis. Now, I think last week we were looking at the whole idea of structure, and let me draw it for you again. I think last week we were looking at the fact that we get an impulse, a correction, we get another impulse, we get another correction, and we get, let's just say that's another impulse there. Now, what we want to see very, very clearly is we want to see a strong break. Let me just do this differently so we can make it clear. All right. Impulse, correction, impulse, correction. Now, this impulse, this is one impulse, right? This is going to be one impulse, and I'm going to break it down into a few little pieces like that. Okay. And we're going to consider that all of this is the last impulse. All right. I hope that makes sense for you. Okay. Now, what we want to do is we want to spot the opportunities when the market might be reversing. Please stay with me on this because this is really cool. This is the cool bit. We want to spot the opportunities when the market might be changing direction. And in this final impulse, which I've broken down into 5 moves itself, right? In this final one impulse, what we would be looking for is we would be looking for a move that goes below this last higher low. All right. Look, yeah, this a higher low. That's correct. We'll be looking for a move that goes below this last higher low to give us an indication that the market might be thinking about turning around. And how that would look in reality, it would look like this: is that the market would actually break below this last higher low like that. That's really key. And we should be looking for those kind of moves. Now, once we have seen that the market has broken below the last higher low, we can put an arrow on that, and we can say that we can consider that to be a very important phrase called a break of structure. That's really, really important. All right, let's see that here. So what I do on my charts is I mark it just like this, and I'm going to do this on the real chart in a second. I mark it just like this, and then got a little tool here which says break of structure going down below. All right. Now, the next thing, really, really importantly, if we are going to continue to move lower, if this is a reversal, we want to make sure that the price then doesn't bounce back above this previous higher high, because if it does that, then this has just become a higher high to this, a higher low to this move here. All right. So what we want to see, if the market is truly reversing, what we want to see is that the price stays below, is capped by this area here. We want the price to be capped by that area there. And what we should see, if the market is going to go lower, is we should see a move somewhere up here. It stays below the last higher high, and then it starts to go lower, creating lower highs and lower lows. All right. So I hope that's really clear. I hope that's really clear. It's important. And the key is to be able to spot this break of structure. That's a really important thing. To be able to spot when the price has moved below a previous structure is really important, because it's a clue. It gives you a little alarm bell to say, hey, think about this. We might be going in the other direction now. And at the point where you can spot the breaks of structure, now what you're saying is, okay, I've seen, let me mark it for you. I've seen this break of structure, and it says to you, I know exactly what I'm looking for now. What I'm looking for is a retracement on the which does not go above the previous higher high. We want this to stay here, and then you can have a good assurance that the price is going to move lower. Now, can you see? There's a very similar pattern to what I've drawn in a blue line to what is actually visible on the chart. Let's see if we can zoom in a little bit. You can see that these patterns are very similar. All right, now watch this. We've got an impulse, a correction. We've got another impulse and a correction. An impulse and a correction, and a final impulse up to here. All right, and then the market does something really cool. It breaks below the previous structure. Whether you want to call it this one, whether you want to call it that would be important. All right, but even the more important one would be this one here. And at the point where the market breaks below that, we've got a very good sense. In fact, I'll put this here because it's just a little bit cleaner. Right, at the point where the market breaks below there, we've got a very good sense that it wants to move lower. And good, we saw the test. It didn't break above the previous high, and so said, so done. It starts to move lower. Now, watch this, guys. We've spoken about ranges before, and it's something that we can carry on talking about. We've spoken about ranges, but now once you see this break of structure, now you want to be able to identify your new range. All right, identify your new range. At first, it starts there. All right, and then the range moves. I'll delete all of this off there now, just to keep it clean. You get the picture. And then the range moves a little bit. It moves from here to down here. And right now we've moved back into the high range for a little bit, but this is our current range. Okay, this is our current range, and this is all we care about right now. We don't know if this is the bottom or not, but this is our current range. It's all we care about for right now. Okay, so in our top-down analysis, we've come from a downtrend on the weekly, a downtrend on the daily. We've come into the 8-hour, which showed us an uptrend on the 8-hour, which is cool. And now it's looking like on the shorter time frames, we are in down mode. We're in down mode. You can count them off. Look, let's count off our lower highs and our lower lows. Let me mark them off for you. Okay, if I mark them off here. So here's our swing high. That'll be our swing high up there. Then we've got a lower high. Oh, sorry, I said it the wrong way around. A lower low, a lower high, a lower low, a lower high. All right, and once you're able to spot these, you're nice. We've got a lower low. Now, listen to this importantly. We don't count this one because this is inside that range. This peak here is inside that range. Okay. Now, ultimately, you're going to see something here. This one becomes the lower high. This one becomes the lower high, which means all of this was a little bit of noise. We can take this out. We can take these out for now. All right, we can take these out. This one becomes this one becomes the lower high, and now we're waiting to see where the lower low ends. All right, we're waiting to see where the lower low ends. Let's try not to get confused on this, because ultimately what we're doing as traders, this is what a lot of people don't realize, is that we're looking at, it's really important. I say this to my guy Rob all the time, we speak very, very regularly, is that we are looking at the market from both sides all the time. We're looking at the market from both sides all the time. When is the opportunity for the buy coming? When is the opportunity for the sell coming? When is the opportunity for the buy coming? When is the opportunity for the sell coming? We're not biased. We're not saying this is my viewpoint and I have to stick by it. We're looking at the market fluid, okay? So what we want to do is see, where does this lower low end? And the only way to do that is to look for another kind of break of structure that comes up here on the lower time frames. All right, another break of structure, and that will tell us that we found our lower low. But for now, friends, we have found our range. We could, even if we wanted to, be very, very precise and say that is our current range. And that's all we need to concern ourselves with right now. That's all we need to concern ourselves with right now. The only danger with that is that we don't know if this is the final low yet. We haven't seen any confirmation that this is the final low. The final low might be somewhere down here. All right. But what we do know is that we are in a downtrend in euro dollar for the short-term trades. And the question is, what do we do? Right? What do we do? Is there a trade to be done right now? Is there a trade to be done right now? And this is the decision. Literally, I'm looking at this live for the first time. I didn't really spend a lot of time kind of going through this at the start. So I'm looking at this live for the first time and trying to identify whether there is a trade to be done. To find the trade, we're always looking backwards into the past. We're always looking from where we are now, which is the current time frame, and we're always looking backwards into the past to identify any little bits in here where the price might respond to. So let's have a look at that. Let's see if we can find anything that the price might respond to. Okay, I'm going to zoom in here. I'm going to zoom in here. It's so funny. I really do not see anything stopping this price from falling at the moment. And like I always say, I'm not a fortune teller, but I don't see anything to stop this price from just falling at the moment. I don't know if anybody sees something different. Please, please, please let me know. But I do not see much that tells me that this price is going to stop. It will stop. It'll find some level of support. I would say that maybe if we are going to see a pause, we might see a pause in the price somewhere around here. This just looks like an area of typical support and resistance where we might see a pause. All right, let's see where this takes us. And actually, see that we've already passed there. We have already passed that area. All right. So we are on the way down, family. We are on the way down in this. So let's see if there's anything here. So really and truly, in my personal view, I don't see any reason for the price to stop until we get into this area here. All right. I don't see any reason for the price to make a big pause until we get down into this area here. The reason why is because this was the last push down before the up move started. And we always look for that. If you're taking notes, can you write this down? You want to find the last up candle before the down move, or you want to find the last down candle before the up move. All right, or the last down candle before the up move. Now, guys, this is the other thing I would say. Be really, really comfortable if you don't find a trade to do. That's another thing. Just be comfortable if there's like nothing to do. I don't want to trade this now. I don't know whether it's going up or down in terms of from where it is at this exact moment. So I just wouldn't touch it right now. I just wouldn't touch it right now. So anything here? The only thing we could potentially do is drill down into the area. We're in this area now. All right, that's where the price is now. The only thing we could potentially do is drill down in there to see if there's anything on the lower time frames which is going to tell us that the price is going to pause. So this is what I'm going to do. I'm going to put a horizontal line where the price is now, and then I'm going to take out the data. If you haven't used your bar replay tool, this tool here at the top, the bar replay tool, is literally worth the price of admission. It's a fantastic, fantastic tool. All right. So the price is here now. We're just gonna drill down to see if there's anything inside this wick. Don't ignore the wicks, friends. Don't ignore the wicks. There's information inside here that we need to look at. This is where the price is now. We're gonna have a little look in this wick and see if there's anything to suggest the price might stop there, okay? So we'll go, sorry, let me just, oh man, I didn't want to do that. Okay, cool. I'm gonna take the price out, take the data out. Okay, so now we're back in time. We've taken a lot of the data out. We know that this is where the current market price is, 118.62, 118.60. And what we want to do is examine to see if there's anything in this wick which is going to let us know the price is going to stop here. All right, let's have a look. And ideally, we would see, or we would be looking for something that looks a little bit like this, right? Or it looks like this, and with something on the other side of it, like that, right? If we see something like that, a down candle followed by an upwards purple candle, then we've got a clue to say that the market might pause somewhere around this this wick here. All right, let's drill down into the lower time frames and see if we can see that. And when we say top-down analysis, literally this is what we're talking about. Going down and down and down and down into the lowest possible time frame to see if there is a potential for a trade. All right, so this is here, and we're trying to see what's in here. So okay, drag down a little bit, nice big push down. We just keep on going down, and that's it. We don't really see a big push back up, but we know that was the last sell into buy action. So we're drilling all the way down. If you notice, I'm going down 4 hours, 3 hours, 2 hours, just to see if we can see that lovely engulfing pattern that I keep talking about every week. Okay. So the only thing that I would say from here is that on the 15-minute chart, we've got these last two down candles that push down before the start of the move up. Particularly this one here, the last down candle before the start of the move up. So either one of these, they're only how many pips apart? 27. They're 10 pips apart. So either one of those, we might see a reaction. And let's put a little note to ourselves: last down candle. All right. Set up your templates. Go into Trading View. Set up your templates. I say 5-minute last down candle. In this instance, it's the 15-minute. Let me change that. And then I just watch. I literally just watch to see that as we go back to the future, let's see if the price responds around there when we get there. All right. So the price is here now. We take this out and we just leave that on our chart, and we'll see maybe the price will respond there. This is the thing, guys. Stay with me now, because we've literally gone down from the 1 week chart, which looked like this. We've gone down from the 1 week chart, which looked like this, all the way down into the 15-minute chart, where we have found a potential reaction point, So now all I would wait to see, does the price bounce off here? Watch this. This is cool, right? Does the price bounce off here? Does it break the structure here? Break of structure is a super important word if you're gonna become a price action trader. And then does it come back into the area? This is where I want to hit my buy. All right, that right there is the area where I want to hit my buy if I see the market move like that. All right, if I see the market move like that. Okay, so we're going to end on that. This is a trade you could look out for. It's not a trade. It's keep your eyes open. It's not a trade idea. This is keep your eyes open and see how the price reacts at 118.25. The reason why I do like that as well is because it's what we call a quarter point. Price likes to react at 25 pips past the big figure. It likes to react at 50 pips past, and 75 pips, which is 25 pips to the next big figure. All right. So price likes to react around these quarter points. So just keep your eyes around this level here, 118.20, 27.25, and see what happens, right? If you see a break of structure up like this, then maybe you want to get in onto a trade on the buy. All right, just keep your eyes on that one. Okay, I did find a nice trade setup for you this week, thanks to my son. He came in here and he said to me earlier today, he said, Dad, take a look at this. And I'm like, yeah, I like this one, son. I like this one. So let's take a look at dollar yen. Okay, we take a look at dollar yen, and let's move this here. 104. Delete that. Ignore that, please. Okay. We'll look at this trade. This is a real live trade setup. All right. I do like this one a lot. We can set this up, and then we're going to go and have a look at the harmonic scanner, see if there is anything on there for us to deal with. Okay. Now, sometimes the market moves in one direction really quickly. All right. Imagine you've got a candle here, you've got a candle here, and then all of a sudden, sometimes the market goes like this. It goes whoops, like that. Okay. It goes whoops like that, and then it continues. And it continues like this. Now, those of you that know what I'm talking about will know that we got a phrase for this. Does anybody know what the phrase is? The phrase for this area inside here. Can anybody put in the chat for me what this phrase in here is? This is super important. I'm teaching you some quality today. Ryan Edwards. Come on, my guy. Ryan Edwards. Okay. Great to have you on this call, bro. Exactly, Michael. Ryan and Michael got it right. This area in here is called imbalance. Now, the market is like a seesaw. All right. The market is like a seesaw. Ultimately, it needs to be balanced. Ultimately, it needs to be balanced. So really, efficient markets will move in a balanced way, right, between the buyers and the sellers. All right, efficient markets move like this, and in between there is equilibrium. All right, that's like a balanced marketplace. But sometimes what happens is that the market just moves too far in one direction, creating all of, oh, didn't want to do that, sorry, hold on, creating all of this area which we call imbalance. And this imbalance needs to be closed off. Usually the price will come back to about 50% of the imbalance, and you can often get a very nice trade from 50% of the imbalance. Okay, let me make this really clear for you guys. I hope you don't mind. We're taking a bit longer on the teaching today, but I think this is a very, very important thing. I'm going to put a couple wicks on here just so you can see what that looks like. All right, there's a wick there. There's a wick there. Let's put this here. All right. There we go. We'll just leave it like that for now. So the imbalance, if I took the wicks away, oops, I didn't want to do that. Let me just delete it for now. If I took the wicks away, you can clearly see that from the top of this candle to the bottom of this candle, there's a gap. You can see that real clear, right? I hope you can see that really clearly, that from the top of this candle here to the bottom of this candle here, there's a gap. I'm trying to move that line down a little bit, but I think you get what I mean. All right, this gap is in balance. Just note that. All right, that gap is in balance. There's a absence. In this case, the market is falling, and in this gap there is an absence of buyers. There's no buyers in this area. The market is dropping, and gaps don't like to stay in market. The market doesn't like to retain gaps. All right. Now, to advance this concept further just a little bit, I'm going to add the wicks in, and then all you need to do, instead of going from the bottom of the body, now just go from the tops and the bottom of the wick. Okay, so instead of going from the top and the bottom of the body, Now you can take the imbalance from the wick. Okay, you can take the imbalance from the wick. So it will look like that. And this bit in here, this space in here now is a void of buyers because we're in a falling marketplace. It can work the other way around as well with sellers. This is your imbalance, and the imbalance needs to be filled. Is everybody cool with that? I hope everybody's cool. Hope everybody's really, really getting that. Imbalance needs to be filled. Most of the time, the imbalance will get filled to 50%. It's like a break-even point. Consider it to be a break-even point. So the imbalance will be filled to 50%. So what we can do here is we can take our Fibonacci, go here to here, and we can know that the imbalance is going to be filled. Usually, depends what currency pair you're watching or what commodity, but usually the imbalance will be filled somewhere to 50%. And so it's quite a reliable trade to look to the 50% mark for a reaction of some kind. If the market is making its way back up, like this, it's quite common to see, boom, it bounces off the 50% and then it will move away, at least temporarily. All right. And that is what we've been able to see on this setup over here that my son showed me today. Okay, let's see if we can find it. Let's see if we can zoom out and find this imbalance. Where is it? There we go. All right. Can everybody see that what I just drew, it looks exactly like that on the screen? Can everybody see that? I hope you can really see that what I just drew with the candles as a diagram is actually represented here in real life, in real candles. The market has dropped too fast in one direction, leaving imbalance here, leaving imbalance. Now, I think earlier today, we already came in to 50% of this imbalance. But when I saw it, I was like, oh, what's really interesting is that not only can you get a trade off the imbalance for at least a few pips, but if you look over here, this is really nice as well. So what we're doing, we're training our eyes to look at one thing, explore it, see if there's any opportunity there. But while we're looking to see, actually the better opportunity is over here. Now, how do I trade imbalance? Let me just say imbalance, and then I'm gonna do one more, and then we'll see how it's traded. When I'm trading imbalance, always, this is so essential, always look for a trade in the direction of the trend. Okay, always look for a trade in the direction of the trend. Enter this trade at 50% of the imbalance with stop above the imbalance. Okay, cool. All right, so that's an imbalance trade. Something else for you guys, one other thing for you as well. We are not learning how to trade. Let's get that out of our head. We're not learning how to trade. What we're learning are the skills of trading. It's a much better way to look at it. We are learning the skills of trading. And the reason why I say we're not learning how to trade is because, at least in my ears and in my head, it sounds like there's only one way to do it. It's like we're learning how to chop down a tree, right? It sounds like there's only one way to do it. With trading, what we're doing is we're putting together a collection of skills and strategies that when we see the market operating like this, we can act like that. And when we see the market operating like that, then we can act like this, right? We're putting together a skill set. A plumber doesn't go into a house with just a plunger. He's going to go in with a wrench. He's going to go in with a hammer. He's going to go in with his torch. He's going to go in with some electrical equipment, because he knows that at whichever time, whatever the job looks like, he's going to need a different tool for the job. So we are building a toolkit. And in that toolkit, sometimes we're going to see imbalance and we're going to take 30 pips out of an imbalance trade. Sometimes we're going to see like what we saw here, which is a liquidity grab. And we're like, that's where the market's coming back to. So there's an imbalance trade where we can take some before. where we can, sorry, there's an imbalance trade where we can take a few pips. And in addition to that, we can actually find beautiful, beautiful liquidity grab trade here as well. Okay, so let me just, again, go back to my favorite tool, the bar replay tool. I'm going to take out all the information from there, and then I'm going to show you what this looks like on the day chart. Now, on the daily time frame, we see our friend. Guys, we spoke about this last week. On the daily time frame, we see our engulfing friend. We love this. We love to see these engulfing candles. This gray candle swallowed up 1, 2, 3.5 candles of work. What we also love to see are these engulfing candles, which takes liquidity. I don't know if you've studied liquidity yet. If you haven't, you need to look at Zachary Hogan, Jordan Morgan on the Go Live. You need to look at Zachary McDonald. You need to look at Alonso on Abel Melendez feed. All right. But basically, we love these liquidity grabs that go up above the last high before dropping rapidly. My eyes gravitated to that. So when my son showed me the imbalance trade today, I was like, yeah, that's cool, but this is going to be even better. Right. When we saw this, what I did was to take my ray and to go and line it up right here at the bottom, because the price likes to respond to the open of the institutional candle. Remember, I think we did this last week. Right? I think we did this last week. We called this one, the one on the left, we called this the institutional candle, that one. All right. We called that one the institutional candle. This is super important. Institutional candle. And we called the other one, we called it the engulfing candle. Right? These two work together like brother and sister, like bun and cheese, for anybody that knows what bun and cheese is. These two work together like Yorkshire pudding and roast beef, whatever your thing is. These two things work together. In Jamaica, we've got a phrase, because I just say the Jamaican phrase, I think it's cool. In Jamaica, we say that these two things work together like bench and batty. That means, like, you know how you see your bum sits on a chair? I don't know if anybody from Jamaica would understand that phrase, right? These two work together like bench and batty. It's like, you know, you just can't, they're inseparable. And once you see them, you just know that I got my bun and cheese. I got my whatever it is that you love to eat. Yeah. So cool. I love to see this setup of an institutional candle followed by an engulfing candle that takes liquidity. Man, this is money waiting to happen. All right. This is money waiting to happen right here. Okay. Our only problem is waiting, is being patient for the price to come back there. Okay. So we've got liquidity taken, we've got an institutional candle, we've got an engulfing candle. All right, let's drill down and find the trade here. You could have taken the imbalance trade, grab a few pips out of that, but I really think the market's going to come higher above the imbalance into this institutional candle here. So what I start by doing is I start by putting my horizontal ray at the open of the institutional candle, like that, because that's where the price is going to come to first. And then we do like we did on the top down, we start to drill down into the lower time frames. We start to drill down into the lower time frames. There it is right there. So this same candle can now go here. All right, there we go. We can go right here. That's the open of the 8-hour candle that grabs the liquidity. Then we start to drill down a little bit more. We're going to run over time today, guys. If you've got a bounce, you've got a bounce, no problem. But we're going to go a little bit over because we got to look at some of the tools and services. Okay, so we looked at the 6-hour candle. Now you can raise it up a little bit more. All right, now you can raise it up a little bit more. You can put it onto the bottom of this one. And then you just keep on drilling down until you get the tightest possible entry with the tightest possible stop loss. Okay, so this is the 4-hour. You can see I marked it up on my chart over here. All right, I've just enlarged it. There's the 4-hour institutional candle, the one that actually takes the liquidity. All right, the price will come back to here almost for sure. And then just kind of drill down, and you kind of drill down. You can already see where we're going. You can already see where we're going because I've got it marked up on the chart. You come here, drill down, and then we start to look for that last push up before the start of this drop. The last push up before the start of this drop, and I'll show you the kind of trade you can get. The last push up before the start of this drop. Here it is. There's the one. You could take the one at the top, but I'm not going to be greedy. Okay, you could take the one at the top. I'm not going to be greedy. I can't count these two as one, and I'm going to put my entry for this trade right here on the 15-minute last up candle before the down move. I don't mind if it moves up a little bit more. Like, I don't mind if it takes this one. I don't really care. I'm just like, okay, cool. I'll take it here, and I'll put my stop loss up above here for this particular trade. All right, you could even put it up above here, but just to be safe, we can put it up above here. It's like 15 pip stop loss. Okay, cool, 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 cool. So let's write this one up. Let's write this one up, and we're going to watch it. We're going to review the Aussie Swiss trade. Please, oh my God, please tell me if you took the Aussie Swiss trade that we were talking about last week. Please, if you took the Aussie Swiss that we were talking about last week, please drop that in the chat, because that trade was, that trade pipped in like, my God, that trade was sexy. Ben, Morena, my guy, took that trade. No drawdown, Ben. No drawdown on that trade. None. Let's see if we can get another one. Anyone else took the Aussie Swiss trade? Anyone else? Man, I'm going to tell you a story about that. You know I didn't take that trade. You know I was out in the garden playing football with my son when the trade came through. You know I didn't take the trade, Ben. I missed the trade, bro. Yes, that was a bench and batty trade. That was the one. That was the one. I missed the Aussie Swiss trade. I can't believe it. And I bet you if I go and watch the replay, guys, I'm going to go and watch the replay from last week's. I think it would have been a Wednesday session. At the start of the Wednesday session, I think I deleted my alert because I had an alert on there, right? And honestly, for the sake of cleaning up the chart, I think I deleted the alert off that thing, so I completely forgot to put it back. Anyway, no problem. They come around again. Let's put on this dollar yen trade. I want to say thanks to my son for sharing this with me today, because I wouldn't have seen this otherwise. So this is dollar yen. We are going to enter a sell limit, and we are going to enter the sell limit at 109. Let's be, we got 35. I'm going to enter, when I mark it up like this, I always leave space for the spread, because each of your brokers will have a spread, and you don't want to miss these trades because the trade fell in the gap of the spread. Okay, we can explain that another week. So I'm going to go at 109.33 here as the entry. And you know what? Let's have a super tight spread. Let's a super tight stop loss. We've got 33. Let's take it, man. Let's take this one right here. Let's take 40. Let's take 48. All right. Let's take. I want to see. There's a little bit of imbalance there, actually. Tiny. Let's do it here. Let's do 52 above the quarter point. Okay. So we've got stop loss. Stop kiss, you know. Wow. Stop loss is going to be 109.52. And actually, the funny thing is, I actually don't have to take profits for this. Quickly, let me see if we can find some take profits for this. Okay, let's see if we can find some take profits for this. Go back to the daily. So what we just did, we found the scalp the entry part. You remember that phrase, scalp the entry and swing the target, all right? What we just did, we found the scalp the entry part. Now let's see if we can swing the target. Well, we know, we you know, the likelihood is that we've got to come back down here into this structure. Okay, let's see if we can find the targets for that. Boom, boom, boom. What is that? Oh, this was the diagram we drew. Oh, all right, we're going to delete all of this. Give me 1 sec to delete all of this, guys. So we can just stay nice and clean. Stick with me. All right, so this was the imbalance explanation that we spoke about. Okay, we're going to delete that. Okay, cool. Okay, we've deleted that. We're also going to delete these. I don't think we need these for now. If I've missed something by deleting those, I'm going to put that in as a little bit of a support. Okay, all right. Okay, let's go. Let's find these targets now. All right. So These may change. These targets may change. For example, if the price comes into here before going back up, then things are going to change. But we're just going to get the targets as they stand right now. Right? We're just going to enter some targets as they stand right now. Okay. We're going to take the 50% of this imbalance. This is kind of imbalance, although there's lots of different candles there. We're going to go from here to here, and we're going to enter 50% of this as TP1. All right, let's do it like that. Okay, so we've got one TP there, and we'll see how this looks in reality in a second. 107, it's a long way away actually. It's a long way away from 109. Let's take this level here. This is, you know, a clear structure here that the price will have some response around this area here. So we'll take that, actually we'll take that as TP1. Still nice, still a nice trade. We'll take this as TP2, and we'll take this level down here as our TP3. This is a support. You see how the price came here, met resistance, it broke through, acted as a little bit of support here, and then bounced away. So we're gonna come back into this area here. Okay, cool. 106 as well. Lovely. All right. So we'll come in just above the big figure, and we'll go 106.08. Let's do that. 50% of that. All right. 106.08. Now, as the structure develops, okay, as the structure develops on the way down, you will get more information about where this may actually end. All right, and why don't we take another one? You can have as many take profits as you like. We'll take another one here at the equal low. This would be the equal low, so we'll take another one there. Let's see. All right, let's mark these up, and then we'll have a quick look at two more things. Like I said, we're going to run over slightly today. I hope you don't mind. Okay, let's find this trade. Where's the trade idea? Here's the trade idea. Okay, and we're gonna zoom in a little bit. Guys, I need to put in a stop loss. Please forgive me. I need to put in a stop loss so that we can work out the risk to reward. Please forgive me. I'm just gonna do that right now, or at least I'm going. Oh no, sorry. I've got it written down. Sorry. Sorry about that. Okay, cool. Where's the trade? I've lost it, gents and ladies. Happy International Women's Day, by the way, to all the ladies on the call. Okay, all right, so we've got our stop loss at 109, where we have it 52. Bang on, I was right there, 109.52. We'll put that as a stop loss. Okay. Okay, guys, I'm telling you, if this trade comes off, oh man, if this trade comes off, we're nice. You're all taking me for steak dinner, one by one, you know. I'll make the appointments in the diary with each of you. We're going for steak, and you all are paying. All right, let's see if this works. Take profit one. We'll take profit one at 108.47. I think the dollar is getting a bit stronger, so I don't know that we'll see all of these take profits, okay? But let's just put them in for now. 107.61. 106.08. That will be a lovely swing trade if we get there. Might take a while, but it would be nice. 106.08. Okay, let's leave it at those three. Let's be satisfied and leave it at those three. All right, let's quickly have a quick look at the risk to reward ratio. I'm telling you, this is so nice. If this trade works, oh my god, it's lovely. It could be really nice. We've got to be mindful that there is a potential liquidity grab above here as well. If it happens, no problem, we can get back in on the retracement. But let's just take a look at this risk to reward profile here. I'm going to zoom in. I'm going to zoom in here, and we're going to do the risk to reward profile to each of these take profits. We're at a short position. We're going to enter at the 15-minute last up candle, and then let's see. Right, we're going to put that there, approximately. Okay, if If we hit take profit 1, this trade will give us, man, if we hit take profit 1, this trade gives us 5 to 1. Let's see how the structure develops as we get nearer there, okay? Because that's really nice already. If we hit take profit 1, we've got 5 to 1 on that trade. If we hit take profit 2, that same trade is going to give us 10 to 1. Oh my God. And if this trade goes all the way to TP3, we're getting 19 times the money. Because of the stop loss, that's the real key. That's a really important thing. The stop loss is what gives you what gives you that super risk to reward ratio. So cool. We've got that up as a trade idea. That will get sent into the group chat, maybe even tonight after this call. And then you can all choose to put that on your live or on your demo account. But please use proper risk management. Do not over leverage. This is your choice. You trade at your own risk. Use 2% of your account maximum if you do, but you take these trades at your own risk. Okay, nobody be blowing up my phone. The sterling yen trade that we looked at from the harmonic scanner did not go very well at all last week. And I think part of what we have to do on these calls is to be totally transparent, to say, you know, some trades go well and some trades do not go well. And that's cool. That's no problem. The harmonic scanner, that trade didn't work. We analyzed it. We looked at some better entries, but we weren't able to profit from that trade. Lesson learned. Okay, let's look very, very quickly at this Aussie Swiss trade. Listen, man, this is the one I miss playing football with my son. I will never argue about playing football with my son in the garden, but it did cause me to miss the nicest trade for this year. So we had I don't know, I've taken it away now, but we had the trade line at 72.25, and literally, as you can see here, right here, we pipped in on this trade. This was on Thursday, I think it was. Yeah, 4th of March. I think that was Thursday. 5th was Friday. That's right. So we pipped in, and we just went in the other direction with like a 3-pip drawdown, which was absolutely lovely. So what do we do? For somebody like myself, I missed this trade. I missed it. All right. So what I'm doing now, I'm now looking for a re-entry with very, very similar take profits. I'm now looking for a re-entry if we get to 21.14, which is a great discount on the original price. So if we get to 21.10, 21.14, then I'm going to be back in that trade. You can see I've lined that up as my next trade entry. Okay. Maybe we won't get there. Maybe the price will just step down from here and keep going. We'll see. Okay. Last thing for today, guys. Last thing for today. I hope you did make profit from that trade in dollar Swiss. It was a brilliant execution. I pat myself on the back for that one. But there are loads of these trades with, and we will find more of them. Let's have a very quick look at the harmonic scanner. We have got on the 1 hour. Let's see, sterling Oz. This trade looks like it has started already. It's already hit take profit 2. So I would pass on that one. In fact, let's look at the 4 hour. These are a little bit more longer term and reliable. This one hit stop loss. No problem. That one's gone. Sometimes when they hit the stop loss, you can actually go into your trading view and see if the harmonic scanner was just out by a little bit. You might find a trade, okay, but you certainly wouldn't take it on the basis of this. Okay, bam, bam, bam. This one's gone already. That one hit take profit 3. Beautiful trade. Look at that, from 1897 to 9. Jesus of mercy. That's mad. So that was from the 26th of February. That trade actually got nearly 350 pips. Wow. Okay, cool. This one's done as well. So the further down you go, the more likely that they will be done. Further down you go, the more likely they will be done. Sterling yen, this would be the same thing. That's done. Sterling Swiss. Yeah, that's gone a long time ago. Okay, so sorry, dollar Swiss. I said that's gone a long time ago. Really interesting stuff happening in dollar Swiss. Take a look at that. You could potentially get into a trade if the price ever retraces back to 90.50. Okay, there could be a nice trade coming up. In fact, there will be a nice trade coming up if it gets to 90.50. Okay, so take a look at that in dollar Swiss. I thought we were going to run over. Today, I didn't leave any room for questions. I literally just went straight to what I wanted to show you. We did a top-down analysis on euro dollar. Didn't find an exact trade to do. We're in the middle of no man's land, but we should be looking for the price to come into. Let me just give you the exact area that we were at again, euro dollar. We should be looking for the price to come into, where are we? FX cross it, FX majors. Yeah, so just wait until the price comes into about 118.25 and see what happens. If you get a bounce and a retest, you might want to buy on the retest. Okay, all right, cool. Then we also had we also looked at dollar yen. This could be nice. It could be, no guarantees, but this could be a nice trade. We got I think we have something like a 15 pip stop loss there, potentially a 5 to 1 and a 10 to 1 trades. Should it work out like that? Who knows? I don't know. Once you get in, the one thing we're not doing, guys, once we get into these trades, it's very difficult because I'm not managing the trades with you as I would be managing them myself. So please, please, please try to manage these trades as best as you can if they execute, all right? If they execute. Okay, the other thing we looked at was a re-entry. We looked at a re-entry for Aussie Swiss, and that re-entry could potentially come around 72.15 area. 72.15 could be your re-entry for short Aussie Swiss if we get there. We may not get back up there. And the last thing we had a quick look at was the dollar Swiss. We had a quick glimpse at that in the harmonic scanner. And I mean, literally just from my eyes, we can see that if we get into this area here, you see this? What do we call this? I'll talk about this next week, actually. These are the same engulfing candles, but it's gone the other way. This happens sometimes, right? These are the same engulfing candles. They've gone the other way. Now, what I recommend is that you just keep your eyes on that area. Oftentimes, the price will come back and use what was an area of resistance now as an area of support. So I will be looking around the 90, the figure area to 90, the figure area to jump in somewhere around these two engulfing candles, and we're looking at the daily chart. All right. Oh God, you can't. Oh my goodness, Clemmy, I can't believe you. I haven't been on. I've been talking to you and I haven't been sharing my screen. I went through all of those trades that we looked at and I didn't share the screen. Thank you, Clemmy. Oh my goodness, that was a bit of a schoolboy error. Okay. This is the dollar Swiss trade that I was talking about there. Here you see the engulfing candles. Sometimes the price reacts off these to go back, but it's broken through. So look for a trade anywhere between 0.900 and 0.9050. There could be a potential trade. We looked at Aussie Swiss re-entry around 72.14. We looked at dollar yen entry. We looked at a dollar yen entry. This could be a nice trade. I'm so sorry I didn't have my screen sharing there. We looked at a dollar yen entry, which was around 109.34 with a 15 pip stop. And we said in euro dollar, just keep your eyes on 118.25 to see if you get a bounce off there. Guys, we're done. We're done. Any questions, anything in the chat, any comments, any questions, please, please, please let me know. Sometimes it's hard doing this because there's no interaction, there's not much feedback. But let me know any questions on that before we shut it off. I'm going to pause for a minute or two, just if you're typing. I'm going to allow everybody to unmute. If you've got a question, just put your hand up and I'll be able to answer that. Let me stop the share again. All good. Guys, listen, my next session is on Wednesday at the same time, Wednesday at 6 o'clock. We might see that dollar yen trigger by then. If it does, great. I'll be able to kind of manage that with you. We might see that Aussie Swiss trigger by then. But listen, if you've got questions, please hit me up on Telegram or on WhatsApp. And until then, I will see you on Wednesday at 6 o'clock. Have a good one, everyone. Take care.